Hi, my name is Garrett Edmondson, and welcome to another one of my data warehouse videos. This video will be a slight departure from my previous videos as it will focus on how to deliver business value using the principles of data warehousing. This video will be focused on financial data warehousing. In other words, using data warehousing on financial data to provide business value. This video is organized into three parts. First, I'll describe what I mean by a financial data warehouse and try to give an overview of the value that it can provide. That will last a few minutes, and then I will have a long period of time, or several minutes, 10 to 15 minutes worth of demos, and followed up by some developer details where I talk to people who are going to develop this type of financial data warehouse. What are the major considerations? So that is the general format of this, and so I will begin with the definition of a financial data warehouse. Now, for the purposes of this video, when I refer to a financial data warehouse, I will be talking principally of a data warehouse that contains chart of account information. So chart of account information, for those who have not worked too much with this type of data, consists of net income and balance sheet data. Net income and balance sheet data is typically kept at a monthly level and is referred to as a general ledger account balances. So these are general ledger account balances, or GLs for short. This is the type of data that we will be collecting and keeping in our financial data warehouse and will serve as the foundation for the financial data warehouse. Later on, additional data sets can be added to the financial data warehouse to enhance it. But to begin with, that is what our financial data warehouse will contain. A word of caution on accounts receivable and accounts payable. Do not, in your first attempt at a financial data warehouse or your first phase, try to incorporate all accounts receivable and accounts payable data. So this is data that is below the monthly level. So let's say you get daily data you want to get a daily accounts receivable and accounts payable data into your data warehouse. I would not recommend, or at least use caution when agreeing to these kinds of requirements, simply because there are usually in most organizations multiple accounts receivable and accounts payable systems. They aren't very well integrated, and there's probably consistency issues and timing issues you have to deal with, and all these things will further complicate your first attempt at a financial data warehouse. So I recommend, unless it's already been set up, not attempting to do accounts receivable and accounts payable as part of the scope of this first phase of the project, which I will be describing. So on to the business value. A financial data warehouse delivers high business value. Why is that? Because all businesses ultimately, at the end of the day, are most concerned with their financial performance. An organization cannot exist for any significant period of time if it's not financially viable. And so this is something that is of critical importance to any manager within an organization. Hopefully this goes without saying. And making your accounting and finance departments or groups within your organization happy should be the most important thing, because if they're happy, they will fund, particularly your finance, will fund further projects. If you can provide business value to these people, which is what a financial data warehouse will do, and which I will demonstrate, then you can get lots of funding for future endeavors. This is something that most people don't realize. It is low risk. Most data warehouses, and depending on which article and which source you read, most data warehouse projects actually fail. I've seen numbers like 60 to 80% of data warehouse projects fail. And they fail because they don't properly consider the risk. And they also many times don't understand the value of what they're trying to deliver. But the risk is a big portion as well. And so one of the risks is the risk of consistent definitions. So in most data warehouse implementations or projects, they're trying to pull data from all over the organization, from various systems, and trying to make it consistent for analysis. Now, this can be very difficult and very challenging because many parts of an organization, many managers might have inconsistent definitions of how to define these this data that you're trying to pull into your data warehouse, and there can be lots of political battles, and it can become a very long and protracted type of discussion. However, with financial data, particularly GL account data, you don't have this problem because by definition, there is only one way to define many parts of this type of data, and that is by adhering to GAAP, Generally Accepted Accounting Practices. That's kind of the whole point of GAAP, is to have consistency within the entire organization, and you have to have this consistency from the inception of the organization. Which means that you have highly consistent definitions of the structures of your data, and this is usually in the form of principally of a net income and a balance sheet. The data is clean. You already have, from an IT data warehousing perspective, you already have built-in data stewards that are responsible for maintaining this consistency and the cleanliness of the data. If the data is off, if the month-end closeout balances don't match up, if your balance sheet does not balance, that's an accounting problem. And so you already have an entire department or group within your organization that is responsible for cleaning the data, for making sure it's consistent and adhering to the structures of GAAP and the principles of GAAP. That's the accounting department. That's one of its major functions. So leverage that, take advantage of that, and build for them something that provides value based on all that work that's already being done. Another great aspect of a financial data warehouse, as I've defined it, is that it's fast to develop. It should only take 2 weeks, and I'll demonstrate that in my demonstrations here in a couple minutes, of a POC that can easily be put together in a couple weeks, and then will be used as a foundation for a production release, which can realistically be done within a couple of months, provided, and there's one little caveat here, provided you're pulling from one source system. If you have multiple source systems or multiple sets of books, that can really complicate your financial data warehouse. And so making sure it's properly scoped to one source system or one set of books, if that's your scenario, is very important. So with that, that's all I had there. Hopefully you get an idea of how valuable and low risk and how much time it takes to develop this. I have developed many financial data warehouses, and this is just information from my experiences. So with that important introductory information covered, now it's on to the demos. So what I have here are several demos which illustrate the points that I'm going to try to make in terms of how this will work and how this provides business value, particularly to the finance group or department. What I have here is something that should be very familiar, but I will still cover it. For those who aren't aware, this should be very familiar to an accounting or a financial analyst, an accounting department, or someone who has that type of function, who looks at balance sheets and net income statements on a daily basis. This should be very familiar, but I'll still go through it. What I have here is actually a pivot table that is connected up to an analysis services cube. And throughout this entire demonstration, I'll be using the same analysis services cube. But it's been structured through a name set. It's structured in such a way as to appear like it's in the structure of a typical or very simplified net income statement, where I have sales at the top, my revenues at the top, and subtracting out things like cost of goods, cost of sales, taxes, all those kinds of things, until I get my bottom line, my net income for a given period of time, January 2004 in this case. Now this is a little bit dynamic because on the bottom right you can see I have on my filters I have a calendar, a date dimensionality to this, and so what I can do is come over here and change my date. If I want to see February's numbers, I can go ahead and do that this way, and so there are February's numbers. Now what is important, and will be important for the next part of this demonstration, is to realize how this data is calculated. So this is a report, and in fact gross sales in most organizations, they don't have a GL. That is what accounting refers to as a roll-up GL that represents all of gross sales. You'll actually have thousands, tens of thousands of actual GL accounts that get monthly balances, and these balances sum to a roll-up GL called gross sales. And typically your chart of accounts, whatever source system holds your chart of accounts monthly data, is not aware that there is an actual roll-up GL called gross sales. And so the report, either in the report or in the reporting tool, it has to know the definition of gross sales, that it adds up all the GLs beneath it to produce one number, $1.9 million in this case. Same thing with returns and adjustments and discounts and anything else that is on this standard report. Not only that, not only does the report have to know the definition, or the reporting tool has to know the definition of these roll-ups, they also have to know how these roll-up GLs are aggregated themselves into higher level GLs, roll-up GLs. For instance, I start with my gross sales, and my returns and discounts are subsequently subtracted from my gross sales to give me net sales. That's why my net sales is lower, $1.8 million. It's because returns and adjustments and the discounts have been subtracted. So not only does your reporting tool or report have to know how to aggregate up these GLs, it also has to know how they roll into each other even at the highest levels. And this is true as you work your way down a typical net income statement until you come to your bottom line, obviously, which has all the calculations, all the roll-ups from above rolled into it, essentially, to use accounting language. And you get your net income. So this is a very standard format. Again, this can easily be done using what you put together with a POC. And so for the second part of this, I'd like to be able to introduce something new, something that will be new to any financial analyst or accounting employee as well. But first, I want to give it some context. On the left-hand side, I have, again, the same standard net income statement and the same standard structures. And what I want to emphasize is this is basically a reporting. So this is usually this would be part of a set of reports that are delivered usually after the end of month closeout process is closed to various parts of the organization. Somehow reports will be delivered from the accounting department to various parts of the organization using more or less this same kind of format. And again, reports are usually a little bit dynamic. You can choose, in this case, I can even drill in and get if I want to do quarter one analysis, I can do quarter one analysis like that, and there you go. And my analysis services cube has all those kinds of calculations. However, the downside to this the reason why this is distinguished from analysis is because if my manager gets, let's say, one of these reports and he looks at his operating expenses, and for some reason his operating expenses are really high this month, he wants to know why. He wants to analyze why. However, given the structure of this report, he doesn't know exactly the lower level GLs that really roll up into this single operating expenses line item on the net income statement. So he doesn't know that, and so he might submit a request back to the accounting department to say, hey, I need to find out, we're really concerned with why our operating expenses are so high. Can you break this out for us? Can you show us the breakout? And so accounting or using their tool or other resources will have to create an additional report just to satisfy that single month's query. And maybe operating expenses will be important the next month, or maybe it won't be. There'll be some other area of interest with the net income. The idea here is that it's not flexible, right? So, and which is fine. It's reporting, and reporting doesn't necessarily have to be flexible. But there's times when you have to do analysis, and this is particularly true of the finance department or the people who perform this type of functions within the organization. Is they are very concerned with analyzing They probably still get the standard reports as well, but they want to combine them together, and they want to perform analysis and financial analysis, and so that managers throughout the entire organization can try to make decisions based on the financial performance of their responsible units or business area. And so what I'm going to focus in on here is simply the net income. And what I want to show you is how the structures and how you think about analyzing financial is very different from how you should think about reporting on financial information, particularly at the GL level. So what I have just done is I've expended net income. So based on my discussion previously, net income is basically the result of all the calculations of everything above it, all the line items above it. However, in an analytical view, things are flipped on their head. I still have net income, and now let me change it back to the appropriate year just to make things consistent. I still have my net income is the same, $4.7 million. $4.7 million. But what has changed is how these things are structured. And they're structured like this for a very important reason. My operating profit is still 6.2. Still 6.2. But if you now, I have my other income and expenses and my taxes. They all roll up into net income. And so that term I used is very specific. Now you can see from an analytical perspective how these numbers roll up into their appropriate GL. And literally this is how things are structured in the analysis services cube itself as well. So if the power of this is that I drill in again to my operating profit, and I want to look at operating expenses, and I can see very easily, here's my operating expenses. If I say, I want to analyze my operating expenses, but I don't have that information on my report, I can hook up to the same cube and browse the actual hierarchy, and I can go down to any level I want. And this is where the real power of the cube comes in. And I can say, oh, maybe my commissions are off or something like that. That's what's causing my operating expenses to go up. And so you can drill down to any level, and this is, if you look at this kind of imitates an actual GL number with 6100 in this case. And so I can drill down to the lowest level GL at any time I want. Let's say I want to look at marketing. I can expand out marketing and look at my conferences and other types of expenses there and analyze those. And in fact, not only for a given period, but what I can easily do is drag my time period along my columns, and now I have multiple years. And you can add all kinds of calculations into the cubes, year over year, quarter over quarter stuff, all kinds of stuff to make this a lot better, but this is just for simplicity purposes. Now I can drill into my operating expenses, and there are my operating expenses all trended out over a year. And so if I want to create a chart out of this, because it's now in an analytical format in this hierarchy of these hierarchies which roll up into net income, I can come over to Excel and quickly just create a chart like this. And I can specify in the chart, I don't want to have balance sheet and everything. I just want to look, let's say, at my operating expenses. All right, fine. I can look at my operating expenses, and you can see, this is probably hard. I'm just doing this real quick. But you can see year over year how my operating expenses have lined up, and if I have any big shifts or spikes or something like that, I can start addressing those at that point. And so it becomes very easy for the analyst, given provided that he has access to this entire hierarchy, he has access to all the GL account information for the entire organization. And any manager, not any manager within the organization, as long as they have permissions and ability to browse the cube, they can browse the cube and resolve their own concerns or issues this way without ever contacting finance or accounting, provided they have access. They've been granted access. So for the last part of my demonstration, I would like to show you what an actual, or close to what an actual net income statement might look like. Since the example I've shown you before is kind of inadequate for expressing the full complexity of what this might look like in a real scenario, simply because it's AdventureWorks, I'd like to show you an example of something that's close to an actual income statement. So here I'm connected up. Again, this is to the same cube, but I'm in a different hierarchy here. And this is a hierarchy that better represents an actual net income hierarchy. So if I expand out net income before taxes, operating, gross profit, revenue. So you can see already I have lots of roll-up GLs. I can drill into any one of them, from gross profit, revenue, sales, all the way back to operating expenses, discounts, interest, all those kinds of things. I can go into sales. And of course now I have much more granularity, all the way down into an actual sales GL account here. And if you look at the bottom, so it tells me it's a sales account, it's the number is 41,100, purchases, income, unitary operators is positive, and then it gives me the hierarchy of where it falls in the hierarchy. So this gives you an idea of how you can have potentially thousands or even tens of thousands of GLs in your net income statement and have it all roll up consistently across the whole organization. So now analysis can be performed on any general ledger account throughout the entire organization. You can also add business units and cost centers to that. I have not done that. And of course, the same analyticals hold true because this is an analytical hierarchy of the net income statement. I can drag months along the columns, and now I have a breakout month by month, and I can make charts and graphs of these kinds of this data very easily and simply, like I demonstrated before. So this gives you an idea of just the power that's involved, how much data is really now just at the fingertips of anybody who has Excel and can connect it to the cube, your organization's cube. That's the result of a POC effort, a 2-week long POC effort. Hopefully that gives you some better understanding of what is possible. So this next section is for the developers, for those who are going to be responsible for building this POC. What is it that you need to do? And the most important thing is you need to have a hierarchy defined in a particular way so that analysis services can read these relationships, the rules of the GAAP essentially, and knows how to roll up all these calculations from the lowest level GL through all the roll-up GLs as well. And so what you really need are primarily 3 pieces of information. You need to have your GL account numbers, obviously. You need to have what's called a unitary operator. So this tells analysis services how this account will roll up to its roll-up account, and then you need to tell it what its roll-up account is. In other words, its parent. You can have additional columns if you want, such as a description, obviously, from your chart of accounts. And if you have business units, cost centers, and things like that, those would just simply be additional columns onto your main hierarchy here. So I want to walk through a little bit, just briefly, how this hierarchy works. And so every GL will have a parent, and the topmost GL will have a null for its parent. It doesn't have a parent. It's at the very top. And so to find out what rolls up into in this case, the income statement, we go to net income. And net income has a GL of 2, and it rolls up positively, and it rolls up to its parent, which is GL number 1, which is, of course, this income statement. And so on and so forth. You make your way down this hierarchy. We can take one more example. For instance, revenue. Revenue has a GL of 6. It's going to roll up positively, and it's going to roll up positively to 5, and 5 is gross profit. Now, with underneath revenue, the GLs that roll up to revenue are sales and returns. Sales, in this case, 7, returns 8. And as you can tell, sales rolls up positively into revenue, right? It affects revenue positively. However, returns, all those GLs will affect your revenue negatively. So that's why it has a unary operator of negative. And it still has the same parent, 6, which is revenue. So that's the structure, and that's the important part. That's the part that tells analysis services how to perform these calculations. And so analysis services doesn't need you to perform these calculations in the ETL itself. Whenever you process the cube, based on this unary operator and the relationships between the GLs and their parents, as defined here, it'll perform those calculations for you automatically. And then those calculations will be available to anybody who connects to the cube, as I demonstrated previously. One other little note here. So as you can tell, these GLs, their account numbers, your roll-up GLs typically won't exist in your source system where you pull in your GL account information, your month-end balances. And so you'll have to create them, and you'll have to create them and put them into your account dimension. And they'll be used for calculation purposes. However, your non-roll-up GLs, so your lower GLs, your lowest level GLs, these will be typically use the account numbers that come from the chart of accounts, unless for some reason you don't want to, but that's the easiest way to do it. And of course, they will have a unary operator as well, and then they will have their associated parent. So just real quick, sales purchased, sales DSD, hardships, service repair and parts. In this case, here are their actual GL numbers from the chart of accounts, and you can see all these guys roll up into 7, and 7, of course, is the sales, the aggregate or the roll-up, the pseudo sales GL, the roll-up for that. So that's how the whole thing's structured, and so that's really what you need. The crux of it, in order to do a POC, and the reason why you can do it in about 2 weeks, is because all you need is what I just explained, demonstrated for you, a net income hierarchy, the GL, the parent, and the unary operator. And I'm not going to go through how to set this up with the analysis services cube. There's plenty of documentation out there in books online on how to work with the unary operator and parent-child relationships. I'm not going to go into all that. But that's really all you need. Access to your chart of accounts, access to the month-end balances, the source it's coming from, and then what I just demonstrated for you. And the rest of it is just standard setting up a cube and setting up all those options there. And that can take 2 weeks. You can easily do that in 2 weeks and be able to produce within 2 weeks something very similar to what I just demonstrated, an actual GL with all levels, and so you can show off what's going on. Now, for your full solution, that will take probably a couple months, but you will use the foundation from what you created above, plus adding in any cost center, business unit, second segments, or however many segments you have, all that kind of logic that needs to be built into your ETL process and accounted for. You need to be able to account for the management of GLs, what happens when GLs are created. Hopefully they are unique. Hopefully, again, if you have multiple source systems, this gets to be more complex because maybe you might have overlapping numbers and GL account numbers, and that can get complex. But all that, the definitions of the cost centers, the business units, your various segments, if you have multiple segments, all that can be easily managed within Master Data Services. And I'm not going to go into how to manage that, particularly because it really depends on your scenario, and I haven't been able to think of a scenario that's generic enough to be useful in videos. The other additional piece that you will need is integration services, SQL Server integration services, and this is to perform things like the month-end processes for processing the cube, for bringing in data into the cube. And you can also use SSIS to perform the trial balances through the closeout processes, if that's part of your requirement. Again, for a full solution, to be able to do it in 2 months, really try to limit the scope of this to one set of books or one source system at a time, and work them through in phases, because that will really help you contain the scope of what you are working on. So that's all I had at this time. I thank you for your time, and hopefully this was helpful and gives you a motivation and understanding of how to create your own financial data warehouse.